We were pretty encouraged with the performance with some of our business in the fourth quarter. Sequentially, we saw improvements with each of our brands. Popeyes, in particular, was comping over the launch of the chicken sandwich in Q4 of 2019, where we posted a plus 38% same-store sales lift, and we had a great year throughout 2020 with the performance of the chicken sandwich and some of our other great tasting products at Popeyes. At Tim Hortons, we saw really good progress in Q4, and in particular, we had our best performance of the year in December. We saw our drive-through business perform much better, and so we were encouraged by the progress we made on some of the key initiatives at Tim Hortons as well. And at Burger King, we were negative for the quarter, but we saw some improvements towards the end of the quarter. We made some investments in long-term value proposition, which we think is really critical to the business, and also in quality of our products with the Real Whopper 100 launch, which is a Whopper free of any artificial ingredients or flavors, which is a big step forward for our customers.
But a number of banks did cut the price target for your stock, and the stock was lower. And one of the concerns was that it appears, especially Burger King, is underperforming some of the global fast food peers. Why is that?
Yeah, we had a couple of quarters at Burger King where we think we have an opportunity to invest long-term in some key initiatives and key platforms. I think we've been a bit spotty in terms of our promotional activity. We wanted to build some platforms that are going to be there for the long term, for the benefit of our customers. Value, an everyday value proposition with the dollar menu is one key step in that direction. In addition to that, we made investments in our core products like the Whopper, as I mentioned earlier. We're looking at a chicken sandwich. We've started the process of testing that in various markets around the country, and we're really excited about the quality of that product and the impact that it can have in the business long term. We're also investing in breakfast, and digital has been a big part of our business. It doubled digital business doubled in 2020 at Burger King, and we're now testing and beginning the process of rolling out a loyalty program, which we think will be a best-in-class program. Will have an impact in the drive-through, which is one of those areas or service modes that's critical from a loyalty standpoint. And we're really excited about the long-term prospects and have a lot of work to do with our franchise partners to keep building and growing the business long-term.
Jose, I also, I believe I'm right in saying you have tested accepting Bitcoin and other cryptocurrencies in a few Burger King stores around the world. Can you update us on that? Is there a plan to roll that out more broadly, including in the U.S.?
We had some news that came out on that a couple of years ago out of our Russia business, but we don't have any plans in the immediate term to go down the path of Bitcoin or any other currency. But we're always open to explore those alternatives, and we'll continue to look at those.
What's your expectation for getting back to comparable sales growth as economies do reopen? New York, for instance, starts 25% indoor dining, a place that a lot of the rest of the country's been for a while. What do you expect to see in terms of traffic and trends?
Well, we've been investing quite a bit in 2020, even in the face of the pandemic, the challenges that everyone's been dealing with. We invested and doubled down in technology. We were doing that already prior to the pandemic, and obviously saw the acceleration of the digital business in 2020. We've ramped up our expenses on the G&A front to hire better and more engineers to help us on that front. We're really viewing this as a key part of our growth long-term for all three brands, in Canada with Tim's, in the U.S. with Popeyes and Burger King, and across the globe. We crossed $6 billion in digital sales in 2020 and more than doubled our digital business in our home markets. In addition to that, we're investing in quality of our food, continuing to make investments on the beverage side with Tim's, on the food quality side at Burger King and Popeyes. And we think that's a massive opportunity. We've made big progress in 2020 and are accelerating in 2021 on the digital menu board front, outdoor digital menu boards. The drive-through experience is so important for our business, and really investing in that and making it a modern and incredibly efficient experience is critical for our business. And then finally, we're investing in sustainability. We're investing in initiatives that we think long-term customers and our guests really expect from us to be on the forefront of these initiatives, which are the things that are going to help us distinguish our brands, our great brands, from others in the same space. So we're excited about the long-term plans. The investments we made on food quality are beginning to pay dividends in Tim's in Canada, at Popeyes and at Burger King, and we're expecting long-term growth. And I think the final piece is we're excited about the growth prospects. Net restaurant growth is important for our business. Our franchisees are excited about that, and we have really optimistic views about the long-term growth of our brands in the U.S., in Canada, and across the globe.
Shepard Smith here. Thanks for watching CNBC on YouTube.